Well, how are you doing with your 401k? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon and welcome to the Prudent Money Radio Show. I'm your host, Bob Brooks. Thank you so much for joining me today. You know I do appreciate it. Well, if you have a question for Prudent Money, all you have to do is go to the site, prudentmoney.com, and send that question in and we'll get you taken care of. That's a great way to get information, get your questions answered. No, it's not a big black hole that your email and your question go into doomed to be lost forever. We do answer all of our emails, love to get them from you. And so certainly do encourage you to go to the website at prudentmoney.com and send them in. We're also right now working on some we'll just call it remodeling. How's that? In the DIY space that's just so big and popular these days. But we're doing some shifting around of things, and I think that you're going to like the resources a lot better. And we'll keep you posted on that, though. That's all at the website, www.prudentmoney.com. Well, can you believe that it is almost the end of June, which means half of 2025 is over with? And it's been a long year, hadn't it? Well, it's been a long, fast year. Let me say it that way. A lot has happened in almost 6 months. It brings you to the question as to what's this next 6 months look like. And 1 year under President Trump's belt of experience and managing the country. And how does all that look? Well, that's what I want to talk about today. I want to kind of bring us up to date on what at least from my corner of the world, what I see and what I think spells risk. And we always talk about risk from a stewardship standpoint, that it's so very important to manage risk. That's a very important principle of prudent stewardship, is to make sure that you are managing risk. And the only way that you can do that is you can get an idea. And I want to stress the word idea. Even as much research as takes place with me and everything that I read and go through, still at the end of the day, you're just getting an idea of what you think might be the risk level in the markets. You may be completely wrong, but I will say it's an interesting combination of things are going on right now. So let's go ahead and let's jump in. And once again, if you've got any questions, direct you to the website, prudentmoney.com. And we're also going to talk a little bit about what do you do with your 401k plan. So let's get going. Tariffs obviously have got to be the number one issue on the board. And a tariff is a tax on goods and services charged by one country to another country. So, for instance, let me give you an example. If you want to sell to the United States consumer base, and you're China and you ship all these widgets to the U.S. from China, in order to get those into the country, you have to pay a tariff, a tax. And of course, this has been going on all year, all the first half of the year. And what's interesting, I think that you have to take a step back and look at what is really a big part of the problem that probably is going to stay a problem and probably can't be solved. If you go back, and I may be a little bit off of these numbers, full disclaimer, I can't remember where I saw this article, but I did write it down as to the facts that I came across. It takes 18 months on average to negotiate a trade deal, and nearly 3 years to implement. Now, let that sink in for just a second. You've got a president and an administration that want to go through a process within a couple of months that normally takes over 4 years from start to finish. And I think that we've got to kind of grab on to that reality that this process was never meant to be done quickly. Yet President Trump is trying to speed, turbocharge the process and get it done. So this to me is what is the problem. I mean, to think about it, if you're a country and you sell to the United States, and all of a sudden they tell you, well, it's going to cost X amount of percent as an increase, you're going to have to pay us to sell to our consumer base. Well, so what does the country that's selling to the United States do? They raise their prices enough to cover the tariff, and then we get penalized as consumers if we want to buy a widget from China, and the cost starts to pick up. The costs start to pick up, and you have you start getting inflation. And not even to mention that it has a bad light, it has a bad optic to it. That well, I'm the president, and even though I'm not the president of your country, I'm going to say to everybody, if you're going to do business with us, you have to pay X amount of percent of a tariff. So this is what was the latest to happen, said today, and the stocks had a little bit of a problem with it, is that President Trump is threatening setting a unilateral tariff on trading partners in 2 weeks. So he's going to say, he's basically from his, this is exactly what he said. So we're going to be sending letters out in about a week and a half, 2 weeks, to countries telling them what the deal is, like I did with the European Union. Well, European Union is a very interesting example to give here, because you want to talk about a situation that is so incredibly financially screwed up. It's the European Union, and they depend on us for financially in a huge way. I don't think this is really talked about too much in the media, but we are constantly helping them out, and they can't afford not to go along with whatever we say. So I don't know that that's a really good a good example, but it will be interesting to see. I think that there's like 95 trading partners in the world, and if everybody's going to bow to his command, so it's anyway. That's the situation. He's starting to get a reputation, though, on Wall Street anyway, is to talk sternly then back off. So it's lay down the law. Here's the tariff. This is what it's going to be. Well, maybe not. We're not going to do it that way, and we'll extend it for another 2 months, and then everything settles down. The markets settle down. The markets go up, and then he comes out and he says this new unilateral tariff idea is brand new, and it could just be, and probably is, Trump's way of negotiating. That we'll see what happens, but that's where we are with the tariffs. But I hold that as the number one issue, and what is the ultimate price of these tariffs going to be. So that's the first thing, and something else too is that you have to know this about President Trump, is that, and this is very well documented in his books, is that he is boom or bust. He goes for the home run ball. And so the home run hitters who have a pretty high rate of hitting home runs strike out a lot. Way more strikeouts than, of course, actually hitting home runs. So he's always swinging for the fences. So if you look in his past and his business record, he's got a lot of failures. He's got a lot of tremendous success stories as well. And I think this tariff situation is the first. Well, I'll back it up. I think his first term as president was to buck the system and clean up the swamp. And I think he found out how tough that was going to be. So that's a process that I don't know if he's still kind of doing it, but that's not the emphasis of what he's trying to do now as being this on a second term. But I do see this tariff process as a home run ball he's trying to hit out of the park. And well, we'll see. We'll see what kind of batter he is. But there's a lot at stake here. So let's talk a little bit about that, and that's a big deal. It has and it could go either way as far as going forward with the economy and the markets and all that concerns. Now, yesterday we had IRS expert Dan Pilla on the program to talk about the big beautiful bill. And I was just curious as to who said, "Hey, I think we should call it the Big Beautiful Bill." Maybe Trump did. Anyway, I just think it's kind of funny. The Big Beautiful Bill, which is a big tax spending piece of legislation, is on the negotiating table right now. Hopefully, they say by July that this will be done. I want to talk about that, talk about the effects of that. But first, I want to get to a break. This is Bob Brooks. You're listening to the Prudent Money Radio Show. Stick around. I'll be right back. Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Listen, if you got a question for Prudent Money, all you have to do is go to the website, prudentmoney.com, send that question in, and we will get that taken care of for you. It's a great way to get information and great resources. We can definitely, if we can't answer specifically your question, I'll give you a good one. I was asked a question about Social Security, and I couldn't answer right away because I had to go back and research it. The subjects like Social Security can be so confusing, but what we want to do is provide you a resource that we can get you the answers to your questions. And that's one of the problems that I feel is with today's consumer, today's investor, is that there's nothing there's not a place they can go and say, hey, can you tell me how this works? Or can you answer this question? Or what do you think? Can I get your opinion on something? We are all about that. So top right-hand side of the website, you'll see Ask Prudent Money. Just click through, and they'll give you a chance to ask a question, and we'll get you taken care of. That's at the website, prudentmoney.com. I was talking about before the break that we have, of course, the Big Beautiful Bill, which is a huge spending, it's borrow, spend. How about we call it the borrow, spend bill? We're talking some insane numbers. I've heard that this could increase our national debt to $52 trillion in 10 years. Just think about that for a second. $52 trillion in 10 years. Yesterday, Dan Pilla had a little bit a more conservative number, but he said about $5 trillion, an increase of $5 trillion. One of the things that Dan also said is the way that things have changed in Washington. And that is the question of, I posed the question, and I said, Dan, I know that people are asking this question, but it is a very fair question. Who's going to pay for all this? They don't even discuss that anymore. And it's all about, they've this bill as it stands today would increase the credit limit of the amount of money that Congress can borrow, which is just such a scary proposition that they could get their hands on this kind of money. $4 to $5 trillion. Now remember that $1 trillion is 1,000,001 millions. So what ends up happening is that you have politicians going out and spending money like crazy, and you have a really a shallow economic growth pattern going on in the economy, which we'll talk about that. And inflation kicks into gear again. And that brings me to my second problem with my second concern is that I just don't think we've seen the end of inflation, and I think it could easily become a problem. It should have dropped way further down. Interest on the inflation chart. If you look at the CPI, Consumer Price Index, it should have dropped way lower than it has. So it says to me that it could easily take right back off again. I'm not a real big believer in hyper inflation or anything like that, but I do think it can come back to be a problem. And everybody remembers what that was like. And to a degree, if you want to buy a car, you're talking about big time inflation, and that's what we're seeing is that's still alive in pockets of our country. I haven't seen any numbers on this, but I'd like to see what the inflation rate of healthcare is. And things that we depend upon, things that we use, things that are important to us as a consumer to keep low, wouldn't you think that transportation costs as well as medical costs should be amongst those prices that should be kept lower? So you can look at everything and say, okay, the inflation rate's lower, but what about on the things that we really need? How much lower is it? And how much would it take to fire the inflation engine back up again? Well, you add tariffs into the mix, you add tax legislation in the mix. And by the way, as you listen to all the talk about tax breaks and everything, you are not necessarily going to get one in your real taxes that you pay, income taxes that you pay. And, one of the things I think they're going to have a problem with is the optics that they are working on a tax cut on the income tax brackets, but that's not true at all. In fact, all they're doing is they're continuing the current income tax that's supposed to revert back to the old tax brackets in 2016, which were much higher. If this legislation passes, which I think it will, I can't imagine it not, then we'll keep the same tax bracket. So don't think that you're going to get a tax cut that way. And the things, and what's interesting to me is if you read the details, at first glance, we'll say President Trump says, and if you're making tips, you won't pay taxes on your tips. Well, you got to read the fine print, and the devil is in the details. But it does make for a very good soundbite. But at the same time, there's a lot more to it than just you're going to get your tips and you're not going to pay taxes on it. So imagine that. But we'll keep an eye on it. They're looking for early July to try to get this done, and we'll see. But tariffs and then everything that I consider a problem, that it's a concern, points at inflation, which also brings the bond market in. I still think the bond market is on shaky grounds, and if we have a problem with the bond market, I don't know what that looks like. The only path that I could put together is that you have a higher, way much higher interest rate environment. And remember, if interest rates go up, bond prices go down. And that bond prices going down aspect of it could affect quite a few aspects of our country. Higher interest rates definitely would stir up some problems. So here's something you want to keep an eye on. If the Fed Chair Powell, if he were to lower interest rates, let's say 0.5%, the question is, what will that do to how will that influence interest rates that consumers depend upon, like buying a house or anything on credit? How will that work? And that is the $1,000,000 question: is that Fed Chairman Powell can lower, raise, do whatever with interest rates all day long, but the markets have got to follow in a sign of confidence. And that I think we've got a real problem with is an overwhelming confidence. I think that there's a slow deterioration of the economy that is happening right now. And just give you, for those of you who need a picture, imagine a dam, and you have 9 holes in that dam. And so to plug up the dam, you stick a finger in each hole, and now you've got 9 fingers in 9 holes, and you got the 10th one that's starting to leak a little bit. And now you put your 10th finger in, your hands are all tied up, and then the 11th hole starts to leak. Nothing dramatic. It's just that you're just seeing a slow deterioration. Now, having said that, if they get once they get this bill passed and they start spending crazy amounts of money on all kinds of things you didn't know about, that could maybe in a short-term period be the shot of confidence that the economy needs. Who knows how that works? But as this is no different than most years, most times in our history of our country, is that there's a lot of uncertainty for sure, lots of uncertainty. But that's been the way. There's always been uncertainty. I think that the uncertainty today has much bigger consequences to it than in the past. So we will keep you posted. This is why one of the things that we're working on is called the Prudent Money Project, and it's really about pushing resources out to you so that you can learn and understand how to make better decisions with what God has given you. And I think this is going to be a perfect time to roll that out. But we'll give you more information on that as we start to put this together. But that'll all be at the website where you can find a place to ask a question at prudentmoney.com, and we'll get you taken care of whatever you need. If we can't answer the question for you, we'll definitely point you in the right direction. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. If you got a question for me, please go to the website and send it in, because we are all out of time till we do meet again next time. Keep the faith and have a great rest of the day.